Toggle's daily video insights. For those of you joining us for the first time, my name is Jan. I'm one of the co-founders of Toggle, and we're going to take a deep dive into one of the many insights that Toggle, the AI system we use, produces across thousands of US stocks. If you'd like to see more of these insights, sign up to our YouTube channel or check us out on toggle.global, where you can also test drive the Toggle system itself. The focus today is going to be on Snap, a company obviously a lot of you are familiar with. And as you can see, there are quite a lot of continually active bullish pressures that Toggle has been highlighting for this particular stock. And so it's really an interesting situation. There was one that has been realized recently, but then there are quite a few that are staying active as of today. We're going to look at the latest one, which is the earnings growth based one. And what, as you can see in the analysis here, Toggle is basically highlighting is that actually analyst expectations have turned down specifically for the EPS forward growth in Snap. And so whenever this has happened historically, along with the recently kind of subpar performance for the stock, it typically resulted in a move up for the stock itself. And actually specifically what we're looking at here, you could see a rise within the next 6 months of as much as almost 40%. There have been 5 previous occasions where you had a similar configuration that highlighted this specific bullish pressure. And so 5 is not necessarily as high as you might want to see, which is why this is only a 5-star rated insight, but it's quite enough to at least get you to pay attention. And in conjunction with a lot of the other bullish pressures that the system has recently highlighted, it's definitely a stock that deserves some attention. Now, the entry point here is 58.49. The confidence interval here suggests that you should stay within this for the next couple of months, and that you could actually hit the target level well before the 6 months is over. In fact, you could also potentially overshoot it quite substantially, all the way up to 110. Now, looking at the past episodes, you can see that actually the stock has previously had these configurations where you've had basically a switch above in the 1 month return, adjusted by volatility, along also with the expectations for earnings growth. And so when that has happened previously, the stock has tended to rally. And again, if you just visually inspect this, you'll see that there have been periods of rallies in between. Of course, this is a stock that hasn't traded for all that long, so the amount of data on it is relatively limited. Looking at past performance, we can see that actually the returns are definitely quite skewed. There have been a few cluster around the 40% area, and then some outliers that are quite substantially above that. And that $1 invested in each of these past episodes would have ended up with about $4 of profit if you had reinvested each time. So much on Snap in the daily brief, which by now should already be in your mailboxes if you're subscribing to it. And if not, you can do so at toggle.global. We also discuss the recently weakening flows of money from US households into the US equities, and we explore what that might mean for the future returns across the equity market as a whole. Thanks for your attention, and we'll see you again tomorrow.